Hi students, 11th standard accountancy, chapter 13, illustration sum number 15, given below are balances of Pondian as on 31st March 2016. The information are given here. First we have to mark it, okay. So capital goes to liability side, sundry debtors goes to asset, and creditors goes to liabilities, sales goes to trading account, drawings goes to liability side, and cash in hand, cash at bank both are comes under asset account, and wages goes to trading account, purchases trading account, opening stock goes to trading account, business premises means land and building goes to assets, bills receivable goes to assets, office telephone expenses, general expenses both are goes to debit side of the profit and loss account, and goodwill goes to asset, okay. So apart from that, they have given additional information, that is adjustment. All the adjustment appears on two times in the final accounts, okay. So stock value at the end of the accounting period means closing stock, okay. So closing stock goes to trading account and asset side, two places it appears. Interest on capital goes to profit, and I will explain you while goes to profit and loss account while explaining profit and loss account, okay. So interest on capital goes to profit and loss account and liability side. Interest on drawings goes to profit and loss account and liability side, and right bad debts and provision for bad debts both are loss for the company goes to profit and loss account, and we have the calculation with debtors, okay. So goes to asset side, profit and loss account and asset, okay. So what they asked us to prepare the final accounts, okay. So final accounts means trading, profit and loss account and balance sheet. So first we goes to trading account. As usual, we have started with debtor side, opening stock, and ended with closing stock on trading account, okay. So opening stock purchases, wages, sales and closing stock as usual we entered on debit and credit side, and we have the differences. Amount is 22,200. so we get gross profit on trading account. Then we have to transfer that gross profit into the profit and loss account credit side. So profit and loss account we always started with gross profit or gross loss. Here we have gross profit, so we transferred gross profit from trading account and enter it on credit side, okay. Then office telephone expenses, general expenses as usual we enter it on debit side of the profit and loss account. Then we have the interest on capital. Listen here, we have capital, how much rupees we have? The capital 1,22,000 rupees. So owner of the business provide contributed capital 1,20,000 rupees. So for contributing capital, a owner taken interest for providing capital. So on the business point of view, interest 6% interest is taken for providing capital. So on business point of view, taken interest means expenses. So it appears on debit side of all the indirect expenses appears on the debit side of the profit and loss account. So interest on capital for 6% on 1,22,000 rupees, we will get 7,200 rupees entered here. And bad debts they have given on adjustment. So 2,000 rupees is a loss we have to enter on debit side of the profit and loss account, and create provision for bad and doubtful debts on sundry debtors 10% means. So we have the sundry debtors 22,000. So from that sundry debtors 22,000 we have to subtract 2,000 bad debts, okay. So we have to subtract 2,000 from 22,000, we will get 20,000 rupees. From the 20,000 rupees we have to find out 10% on provision for bad and doubtful debts. For 10% means 10 by 100. So we will get 2,000 rupees. Bad debts 10%, provision for bad debts 10%. So provision for bad debts and bad debts both are loss for the company. We have to enter it on debit side of the profit and loss account. We entered, okay. On credit side we have to enter interest on drawing. Listen, they have given drawing how much rupees? Drawings 2,000 rupees, okay. So what is meant by drawings? cash or goods taken by the owner of the company. Okay, so for taking for his personal use. So personal use means drawing. We called the term personal use means was drawing. So for taken goods or cash from the business for his personal use by the owner, he has to paid 6%, 5% interest for taking drawing for his personal use. So 6%, 5% provide paid interest for taking drawing. Okay, so for paid interest 5% means on business point of view, it is the income for the business point of view, because a owner provide 5% interest because of taking cash or goods for his personal use. So business point of view, on business point of view, interest received. So interest 5% interest received means it's a indirect income. Okay, so 5% for 2000 we will get 100. Okay, so interest on drawing means interest received 100 rupees entered. So all the information related to profit and loss account we entered here. We will get loss. Okay, 1400. That 1400 loss, net loss, we have to add less with capital, transfer with the capital account. Okay, so on balance sheet we always started with liability side on capital, on liability side with the capital. Okay, 1,20,000 rupees. With capital we have to subtract net loss. If we get net profit, we have to add net profit with capital. Here we got net loss, so we have to subtract net loss from capital. We will get 1,18,600 rupees. From that answer we have to add interest on capital as per the format of the capital. We have to add the interest on capital, and from that answer we have to subtract the drawing and interest on drawing. Drawing rupees 2000 and interest on drawing we have 100 rupees. Both we have to subtract it. From the capital we will get 1,23,700, and sundry creditors we have entered it on liability side. Okay, let's goes to asset side. We have to enter as per the format of the asset side of the balance sheet. We have to enter bills, goodwill, business premises means land and building, stock in trade means closing stock, and bills receivable, cash at bank and cash in hand we entered here. Then sundry debtors, we have a calculation with the sundry debtors, so we have to enter inner amount column 22,000 and less bad debts. They have given here bad debts 2,000 rupees. We have to subtract from the sundry debtors. We have get 20,000. From the 20,000 we have to subtract it 10% on provision for bad and doubtful debts 2,000. We will get 18,000. So all the information related to balance sheet we entered on both liabilities and asset side, and we have the finally we got equal amount as the total on both sides. So 1,46,200 we get equal total on both liabilities and asset side of the balance sheet. Do you have any doubt? Please comment it on the comment box. Thank you. Take care.